Well, good evening to everybody out there in internet land. Hi, how are you doing? What's up? Welcome to Chattin on the Porch, the Blue Monday session. No, we're not blue tonight because nor is our language blue. Well, it might get blue, who knows? But anyway, it's Blue Monday because we're all back to work, but it's not blue on the electronic front porch because, aside from the fact that you get to hang out with your fabulous host, we're bringing back one of our absolutely favorite guests to talk about all things that are going on in the world right now, particularly as it relates to your wallet. And we'll be doing that conversation on Rumble, we'll be doing it on Twitter, and we will be doing it on that quaint little alternative social media platform known as YouTube. So if you're just happened by and you're wondering, my, this looks interesting, what are we about to get into? Well, pull up a chair, pour yourself something, and let's sit down and have some fun. Again, my name is Brian Trippett. I am known in social media as the Front Porch Conservative, and this live stream is known as Chattin' on the Porch. The fans of this little endeavor are known as Fedora Nation, of which, if you are not subscribed to my channel on Rumble and YouTube, please do this poor soul a favor. Go ahead and subscribe. I would genuinely appreciate it. Also, hit the bell for notifications, hit the thumbs up. Mr. Algorithm seems to like it when you do that sort of thing. Share the link around, tell your friends about it. Let's see if we can grow this thing into something big, wonderful, and fun. So we're glad you guys are here with us tonight. We're just going to give everybody a second or two to settle in. I've got to check my email real quick and talk to you guys at the same time because I am multi-talented like that. And just making sure I've got everything. Yeah, I think I got most everything pulled up. Yep. I got them all. Okay, just was checking with my guest about that. So, yeah, we've got it all. We're good to go. Oh, so good to have you guys here tonight. Again, my name is Brian Trippett. Welcome to the Electronic Front Porch, and more particularly, welcome to Chattin' on the Porch. All right, let's just get right down to it, y'all. After a couple of, about 10 days ago, everybody got a gigantic shock to their system. A certain report came out from our beloved federal government, which of course would never tell us anything that is untrue or, shall we say, exaggerated. And it was the kind of report that when it came out, everybody went, oh. So at that point, I said to myself, all right, we'd already talked about it previous, but it's time to bring somebody back who can actually interpret this nonsense and tell you and I what's actually going on, and more to the point, what we actually ought to be doing about it. She has been here before as a guest and is always welcome back here anytime she gives me the word that she wants to come on. Dr. Robin McCutcheon is a professor of economics at Marshall University and has been teaching multiple courses now for years. Her students, when they get done with her work, go on to have a better eye for what's going on in the news when it comes to someone telling them about what's going on in basic economics. She teaches just that: microeconomics, macroeconomics, banking systems, etc., and so on. I could go on with telling you everything about this woman, but why deprive you of the pleasure of being introduced perhaps for the first time, or in some cases reintroduced to one of our favorite people, the unofficial professor of economics for the Electronic Front Porch. Ladies and gentlemen, I give you Dr. Robin McCutcheon. Doctor, welcome back. How you doing?
I am well, Brian. Thank you so much for inviting me back on the front porch.
Oh, it's a pleasure, absolute pleasure to have you here. And I think we were, if I recall backstage, we were talking. You were about to. I froze. Oh no, that's not good. I did. Oh. I'm not. I swear I'm okay. All right. Am I back?
You're back.
I good? Okay. Well,
you're good.
Okay. Yeah, we were talking backstage that new semester's about to start up for y'all. So I guess you're looking forward to getting back into the swing, so to speak.
Sure.
Okay.
I had such a great summer. We did a lot of canning. We did all manner of blackberry, blueberry, strawberry jams. We did salsas. Had a great time visiting with my children and seeing my grandson. So I guess I'm ready to go back. Not really. I'd rather play hooky for another 6 months, but
you sound like your students.
Well, see, that's okay. That I can empathize with them. On the first day when I welcome them back, I know that, we've got a long semester and it's a marathon, it's not a sprint, and I know at the end of the semester I'm going to look at them and say, "See, I told you it would go quick."
Absolutely.
Now, now,
Absolutely.
now, aren't you sorry that you messed up and you didn't complete all your homework and you didn't get your exam studied for? And Merry Christmas.
Yeah, really. Yeah, here you go, folks. Welcome back. They call it higher education. This is the high price. No, is it about
Right.
the money? No, it's about the fact you have to be a responsible human being and do things by a
That's
deadline. So
that's right.
there you go.
Yeah, there are multiple lessons for the young people. Among them are self-responsibility and self-command, and that's a tough one for, not quite 20-year-olds to figure out. So it can
Yeah.
be a fun semester and it can be a tough semester, all for the same person.
Yeah, absolutely. And
Hmm.
how well a semester goes, more or less, is dependent upon how disciplined someone wants to be. And that's
Hmm.
something that sometimes students have it takes them a little while to realize that. But once that lesson finally kicks in, then they're going to be okay. That's
Yeah,
when you know, okay, they get it.
yeah, yeah. My dad said to me a long time ago, he said, "Look, if you figure it out by the time you're 85, you're probably going to be okay." And I
Yeah.
said, "What if you don't figure it out by 85?" He said, "Well, then doesn't matter."
There. At that point, it's kind of like, yeah, what are you gonna do? It's like, we were talking backstage about my mother, and she'll say to me every so often, "Yeah, the doctor's getting on me. They want me to eat less sweets." And I'll say, "Mom, how old are you?" "Well, I'm years old," and I'll be like, "Mom, you kind of earned the right at this point to do more or less what you want, short of like putting yourself in danger. If you want the donut, go for it. I mean, really, who's really gonna give you that much grief about it? I'm sure the doctor would love to have you do a lot of things, but at the point you were at in life, it's like, eat the donut, pick up the brownie, go ahead. It's
Have a
like
little bit of chocolate ice cream.
drink the sweet tea. It's
Right.
like, you know,
If it hasn't killed you now, it won't.
exactly. It's like years ago, I had a friend of mine, and she had a father, and if I've told you this story, stop me. But he passed away, but he was also a former member of the Illinois legislature. Now, by law, the state didn't matter how old they were when they died, the state was required to perform an autopsy. Well, that man drank a 3/4 of a glass, about like this, 3/4 of a glass of bourbon every day. They did the autopsy on him. His liver was clean as a pin. His three daughters said, "Oh, doc," said to the coroner, "Oh, doc, you never should have told us that, because now it's like, what incentive have we got to stop?" It's like,
That's right.
really?
Yep. Yep.
Oh,
Well,
goodness.
my
Goodness.
husband's grandmother drank 3 fingers of whiskey every night, and she lived to be close to 100.
Yeah. Yeah. And I will bet you that if an autopsy had been done, her liver is probably like, yeah, good,
Clean
no
as a
problem.
whistle.
Yep.
Yep.
Well, I'll tell you what, let's dive right in.
Okay.
And as I said, there was a report that came out about 10 days ago now.
Hmm.
And when it did, it was more or less, to borrow one of Jefferson's great phrases, it was like a fire bell in the night. And if people are not aware of what I'm talking about, it was this. It was the unemployment report. Everybody was expecting there to be like, 185, 190,000 jobs created in the month of July. Well, it came in at 114,000. And worse than that was the sub headline on this, which was non-farm payrolls. The downward revision from June was revised down to 179 because it had been at 225, and et cetera, and so on. The unemployment rate goes up to 4.3, highest since 2021. triggering economic recession rule on recessions, da 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 da. Well, needless to say, the Dow freaked, and then on top of that, we'll get into what happened 2 days later out in Japan. So, look, we started talking back in December of last year. We talked again in May, and now here we are in August. Was this the report that's the fire bell in the night that everybody finally realizes, oh crap, it's here? In your opinion?
I if not the fire bell in the night, then certainly an alarm going off somewhere. There are people who work on Wall Street, who work at like CNBC, for example, who know that the numbers that the Bureau of Labor Statistics is producing are fake. They know, and they've known this for months. If you go and you look, the smart people, the people that I like to read who publish on Zero Hedge or Mish Talk, people who read deep down into the numbers have realized for months and months, more than a year, that every time an unemployment report comes out, which is the first Friday of every month, all of the previous month's jobs numbers are revised downward. And they've been doing this for like 2 years. And so if they're revising these numbers downward, then the discrepancy is the word I want to use. The discrepancy keeps getting wider and wider and wider between the numbers they're telling us and the real numbers that are true. Then at some point, you can't hide anymore that the BLS is lying to us. And you can't hide the fact anymore that the unemployment rate is completely bogus. And so 4.3%, insert F-bomb right here, because that is not, 4.3% isn't even close. I mean, so some of the smart economists that I've been following for years, one of the guys is John Williams, and he has his own website called shadowstats.com. And he will do monthly reports or weekly reports, and you have to have a subscription to get that. But he also publishes public data. And then because he has been an economist for, 25 or 30 years, and he knows the old way of calculating these unemployment numbers or inflation numbers, he publishes a comparison between what his calculations are and what the government says the numbers are. So if you run over to johnwilliamsshadowstats.com and you look at the unemployment numbers, you'll find out there is a huge discrepancy. The government says we have an unemployment rate of 4.3%, or if you look at the U6 table, it's 7.8%. But what John Williams is saying, the unemployment rate is pretty close to 25%. And so you only really need to use your own eyes to go out in just walk around your town, walk around downtown Huntington, wherever you live, walk around and see how many help wanted signs there are. And we can tell that the economy is not doing well because the number of businesses that have gone bankrupt is exploding. So if a business goes bankrupt, they're not hiring anybody. Are they?
No, absolutely not.
And not only that, but there's a running list. Someone on someone on X was keeping a running list of companies that are laying off or closing their doors. And so, I mean, the evidence is there. So we know, I think what happened in August is that the lie became so blatant that nobody could cover for it anymore. They couldn't, brush it off. Oh, maybe this wasn't what we expected, but it was becoming blatant for normal common people to see. Does that make sense?
It
They
does.
couldn't the media, the mainstream media couldn't hide it anymore. And that's why, I think, that's why the alarm bells went off with the August report that was telling us what was going on in July.
Yeah.
That's my assessment of it.
Well, I tend to agree with you. And speaking of, seeing and hearing things and coming to your own conclusions, um, I heard something the other day, and it was related to the commercial real estate market. And maybe you've heard this
Mhm.
tale as well, or something similar to it. I was driving in my car, and I forget who it was. There was a story about a company, and I forget who it was, bought a building somewhere for, call it, $300 million. Okay. Put about 80 million in improvements into the building. Okay.
Okay.
Sold it recently. Take a guess at the number. Just any guess.
Go back to the number that you told me because you froze for a second.
Bought it for about 300 million, put about
Okay.
85 million in improvements into it.
Okay.
Take a guess how much they sold it for.
90% less than what they spent.
Close. $8.5 million.
Mm-hmm.
$8.5
I wasn't
million.
even close. They
Yeah,
only got 5%.
yeah. Well, I mean, and I'm sitting here going, now, apparently, through the rules of depreciation and all of accounting gimmickry and et cetera, they're going to come out of it fine, or
Probably.
I should say, relatively unscathed. They're going to get singed on this, but not as bad as if they couldn't, write off the depreciation and everything else.
Right.
And I'm sitting here going, if this is indicative of how bad the commercial real estate market is right now, we're sitting on a time bomb, and this sucker is
That's
about to go off.
that's the point though. I mean, if one company does this, it's probably
Mm.
not
Yeah, you could write.
macroeconomically, it's probably not a big deal.
Yeah, you could say it's just a weird anomaly. I mean, just one company
Right.
did something dumb.
Except that this is happening all over the country.
Mm-hmm.
It's happening
Exactly.
everywhere.
Oh yeah.
People who bought buildings, they're not even getting half their money back.
Yeah.
So combine that with the unemployment rate being fake.
Oh yeah.
Combine that with the number of business bankruptcies that are exploding. I think it's something like the highest since 2008.
Mm-hmm.
Combine
Okay.
that with all of these Bureau of Labor Statistics reports that have been revised downward,
Mm-hmm.
and and all of a sudden you can't hide from common people what's really going on, even though the common people, they kind of know what's going
Mm-hmm.
on. They kind of got a feeling. Nobody's actually told them anything, but
It's
you know,
it's
it's almost like it's not true until ABC tells me it's true. It's not true until CNBC tells me it's true. But they know in their gut that it's
mm-hmm.
bad,
Mm-hmm.
and we're
Well,
getting to the point where you can't hide it.
it's like, and you're going to understand this better than anybody else. It's like, I call them old timers. They walk outside their house. They can look at the leaves on the trees that are turned down.
Mm-hmm.
They can feel a certain thing in the wind. They can look up at the clouds. Ask an old timer, is it about to rain? They say, oh yeah. How do you know? The leaves are turned down. Well,
Leaves
what
are
does that
turned
mean?
upside.
Or turned up. The leaves are turned up.
Yeah.
Well, what does that mean? Have you looked at a radar? I don't need to look at a radar. All I got to do is look at the tree over there. The leaves are turned up. I know the rain's coming. And sure
Mm-hmm.
enough, give it a few hours later, it's raining. Even though
Yep.
the weather report, AccuWeather or whatever, says, no, not going to rain. No.
AccuWeather.
Old timer knows when it's about to rain. That's the
Yeah.
American people right now. There's a old timer's sensibility They
Right.
don't necessarily need to read a bunch of economic reports to figure out what their eyes are telling them.
Right.
And that's
Well,
kind of more or less where
and
I think, yeah, where we're at.
but it's not just the unemployment report that is so bogus.
Mm-hmm.
Um, Mainstream media has been telling people the economy's not that bad. Stop believing your lying eyes.
Mm-hmm.
We don't have any inflation. What are you talking about? Except that when I go down to my Kroger's, not, the Kroger on Fifth Avenue, um, I'm paying, let's see, I used to pay 69 cents for an 18 count of eggs.
Yeah.
It's now $3.50 almost.
Mm-hmm. Mm-hmm. Yeah.
That's that's an increase of 600%. A
Absolutely.
600% increase in my eggs. When
Yep.
I go and buy my half gallon of milk, it went from $1.50 to almost $5.50. So I got one for you. I used to buy a pound of very lean burger. It was 96.4. So
Yep.
very,
I
very
know.
lean, very
Mm-hmm.
little fat.
Yep.
In January 2021, that pound of very lean burger was a little bit less than $4. I think it was $3.99.
Mm-hmm.
I just went shopping today. That pound is $9.99.
What are we? What are
That's
we?
a
What?
300.
Where did they get the
That's a.
hamburger from? A golden calf?
I think so, but I was lucky. I was going, oh right, it's clearance priced at $5.50.
Oh dear God, that's
I
scandalous.
know. It's a clearance. It's still 150% more than it was.
That's
So
insane.
okay, so this is and I'm buying meats on clearance. I don't buy the full if it's full price. I don't need it. I'm old enough to remember the stagflation of the 1970s, watching my parents try to stretch their paychecks farther. I remember the 15 and 20% inflation rates of the 1970s. I've reverted into my mother. We're doing things the way we used to do in the 50 years ago in the 1970s.
Yep, absolutely.
We're shopping on the odd days. We're kind of timing it. We don't shop right before the weekend. We shop after the weekend because that's when the stores put all the meats on sale. They haven't been able to sell them. No one's buying them.
Yep.
You swoop in there and you get a package of brats for, a couple of dollars. A package of brats used to be 99 cents.
Yeah.
And you think you're patting yourself on the back going, "Yay, I found it for $2.50." Okay, it's a little brown. I'll just cook it really well.
Yep.
Planting gardens, doing canning. So people know this. They've been watching their food prices hiking up and up and up. And we've talked both times I've been on your show about the gas prices and how they went from $1.87 on June the 20th, 2021 to $3.50.
Oh yeah.
So there's only so much bullshitting that mainstream media can do to people, and people are I'm sure they are. I'm sure they're looking at mainstream media saying, "Why are you lying to me? I know you're lying to me because I can see with my own eyes what's happening. Inflation is the invisible tax."
Yep.
And so for all of the people, and this is why I feel a little sorry for my students, they never lived through the 1970s, and their parents were kids or maybe not even born during the 1970s. So they have to go back to their grandparents and their great-grandparents for some of our elder knowledge to come and drip down to us to tell us, okay, well, how did you make it through the great stagflation times?
Oh yeah, and that's the American people are spoiled in a lot of different ways, but from an economic standpoint, they've been very spoiled. Yeah, we had the downturn of 07, 08, and everybody got a taste of it. This one, this
This is
one's going to
different.
get bad. Yeah, because this has got
Yeah.
all the economic calamities rolled into one, hitting at the same point.
Right.
Now,
Well,
07, 08 was just the housing market.
Well, in 2007 and 2008, the knock-on effects of that housing, that credit bubble bursting, was that we had a massive amount of deflation or disinflation, meaning that we had a massive amount of we had a massive decline in the demand for goods and services. So if the demand declines, if it goes down, it means that prices are falling. And so people's paychecks didn't have to stretch. Okay? That's not what we've got this time.
No.
This time we've got a Federal Reserve note that's being inflated until it bursts.
Yeah.
So we've got inflation, and at the same time we've got a decline in the demand, the aggregate demand.
Yep.
So I've heard Jim Willie said it's going to be a hyperinflationary depression. So it's not even going to be like the one we had in 1929 and 1930. It's going to be worse. It's going to look a little bit like Weimar Germany.
That's just
or
what
maybe,
I was.
Maybe Venezuela, or maybe Zimbabwe, where the currency is inflated to the sky. It will be inflated until it just finally poof.
Yeah.
No one will take it. And in fact, all around the world, the BRICS countries, the Brazil, Russia, India, China, South Africa, that consortium, they are adding to their consortium numbers.
Yeah.
And they just had a great big conference. Where's my piece of paper? They just had a big conference over in St. Petersburg. 21,000 people went to this conference, representing 139 nations.
Yeah.
They've already got 60 countries that are joining their consortium, and probably the other 80 countries that are going to be coming online. Now, all of these countries will be using their own currency to buy and sell and trade, not the Federal Reserve note. And so what happens to the world reserve currency if nobody's using it?
Value goes right through the floor because it has no value. Yeah.
If they won't use it, it has no value. The only value that the U.S., I don't even want to call it a U.S. dollar. I'm going to call it a Federal Reserve note, and please correct me when I slip up and call it the U.S. dollar. But the Federal Reserve note has no value because it's entirely debt driven.
Yeah.
Every dollar is is completely consumed with debt.
Yep. There's not an ounce and not an ounce of anything backing it.
There's nothing behind the US dollar. Nothing. Literally. I'm sorry, Federal Reserve note. There's nothing behind the Federal Reserve note. It's fake. It's fiat. Yeah. Fiat means fake.
Yeah.
So we've got that going on out in the world. You know, how is it? You got to wonder, how is it that we're still getting trade from foreign countries? They ship a cargo ship full of stuff to the U.S. And if it's one of these 40 or 50 or 60 countries that's connected to the BRICS and they will not take U.S. dollars, well, what are they taking in trade?
Yeah,
oil?
That's a great question. Yeah.
Gold? Silver? Lumber?
Bottle caps? I don't know.
I don't think bottle caps.
No, I'm kidding. But yeah, I get your point. It's like, yeah, and at some point, this group of 60 will become 100, 150,
Oh yeah.
Because they're going to look at the U.S. dollar and realize there's nothing backing it up. It's hyperinflated beyond all imagination.
Right.
This thing's going to crash, and let's get out while they're getting still good. That's
That's
whatever
right.
positions we've got in the U.S. Treasuries. Let's shed them quickly
Right.
and be done.
Right. Like Japan has been doing.
Oh yeah.
So the I know that the thing, can
Okay.
we kind of
Yeah.
shift a little bit to the Japanese carry trade?
That's where I was going next because so the report comes out on, well, let me do a real quick commercial. This is the top of the hour. Ladies and
Oh,
gentlemen, if you've happened upon this live stream and you were trying to find that other thing that's supposedly going on tonight, which is not nearly as interesting as this, by the way. My name is Brian Trippett. I'm the Front Porch Conservative. This is Dr. Robin McCutcheon, Professor of Economics at Marsh University. This is known as Chattin on the Porch, a live stream where we bring on guests on occasion with the expertise of a Dr. McCutcheon to talk about all things relevant to your life. In this case, your wallet, commonly referred to as microeconomics. So, the jobs report comes out on Friday, and I want to set this up
the second of August.
the
So
second
just
of
to be
August.
clear,
2nd of
10
August.
days ago. Right.
So I get a phone call Sunday night from a buddy of mine who affectionately is known as Smiling Jack. So Smiling Jack calls me up and says, "Hey Trippett, have you seen what the Nikkei is doing right now?" I was like, "Jack, it's 9:30 on a Sunday night, man. I'm about a half a step away from going to bed. What the heck are you talking about?" "Dude, that thing is in the tank right now." I'm like, "Come again?" He's like, "Down 7%. They've suspended trading." I'm like, "Okay." So I go, pull out the magic little box that I call my iPhone, start getting online, seeing what the heck's going on. And sure enough, Smiling Jack was spot on the money. Nikkei had suspended
Hmm.
trading, down 7%. They were calling it the worst day since Black Monday in 1987.
Yeah.
And I've got to, and since we're sore on the subject of markets going up and down, the my good friend Christian Watson, who I'm sure you two have crossed paths at some point, asked the professor about how stock market failures happen. Is it basically that investors lose confidence and everything crashes? If so, doesn't that mean the economy is always fragile even during good times? Well, Nikkei goes down on a Sunday, and everybody Monday morning on Wall Street went, shit, here it comes. Bell
Hmm.
opens at 9:30, and that led to the following. Let me find it here real fast. Oh, yeah, here it is. It led to this wonderful headline. Dow Jones sheds 1,000 points. Japan stocks rebound, and way down goes the market. So, I guess to Christian's question, and you're getting ready to address it, I know, because I can hear pen and paper and highlighters going in the background. So,
Right.
what do we make of all this in Japan and here in the U.S.? And to Christian's question specifically.
Well, the thing that happened over in Japan was that I'm going to put it in economic terms, and I'm going to put it in normal language. The thing that
Okay.
happened over in Japan is that the carry trade kind of went belly up. Now, carry trades refer to operations wherein an investor borrows in a currency with low interest rates and then reinvests the proceeds in higher yielding assets somewhere else. So, over in Japan, the interest rate was very, very low. So, according to this definition, the investor borrows in the Japanese yen because it has a very low interest rate. And then they take that yen and they sell it in a different country where the interest rate is higher. Now, what happened over in Japan on our Sunday, which is their Monday, the Bank of Japan raised the interest rates. So all those people, okay, so remember, a carry trade means that the investor borrows in the currency with the low interest rate and then takes it over to the country with the high interest rate and sells it. And so Japan raised their interest rate.
Oh no.
That's what happened in
Their
Japan.
own government messed them over, more or less.
Pretty much. It was the Bank of Japan.
Okay,
Now,
the
it
Bank
took
of
the Bank
Japan.
of Japan. It took the Bank of Japan, I don't know, some hours, maybe a day, to go, whoa, 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 we didn't mean it. We'll lower that interest rate. But by then, it
It's
had
too late.
already rippled across, it had already literally rippled across the world. It went west and went all the way around the world.
Yeah.
So by then it's too late because we're not phoning our brokers anymore. We're doing our trades online. So it's instantaneous almost.
Yeah.
So I'm going to answer Christian's question, but I need to kind of preface
Go
it.
ahead. Go ahead.
On Monday, a week ago, when everyone was having the shits, it comes out that Warren Buffett has relieved himself of a large chunk of his Apple stock.
I saw that headline.
And it wasn't just his Apple stock. Between him and Berkshire Hathaway, it sounded to me like they were just liquidating everything. Now, I don't think it was everything.
Right.
But he liquidated to the tune of like almost $300 billion. $300 billion. Now, our stock market is really wide and really deep. But you get the MSM, you get CNBC going, Warren Buffett selling his stock, all of it. It's like yelling fire in a crowded theater.
All hell breaks loose.
That's what happened on Monday, in my opinion. But see, it wasn't just Warren Buffett. It was people like Ray Dalio and Jamie Dimon who have been shouting from the rooftops for months that the market is very frothy. I don't think they actually use the words irrational exuberance like Alan Greenspan did back in the day. But these people who control billions and trillions of dollars, JP Morgan controls trillions of dollars in portfolio management.
Yep.
Ray Dalio is one of the richest guys on Wall Street. Warren Buffett. You get basically insiders who maybe they're not shouting, hey, I'm selling my stock, but the information gets out there. And then you get a panic. Now, go back to Christian's question, please, if you wouldn't mind putting it back up. If you wouldn't mind putting it back, because it's a good question.
Let me find. Here we go. Okay. Here's the question.
So, how stock market failures happen? You get CNBC on Monday morning a week ago saying, "Oh my gosh, we all of a sudden just realized that Warren Buffett sold out of his stock in Q2." So that's April, May, and June. That's not even July. July is Q3. But this information that he sold out, he's been out. And so this information goes around and people panic.
Yep.
So, for instance, what happened in the 1929 stock market crash on Black Thursday, which was October the 24th, the same sort of thing happened. JP Morgan started selling out of its stock very quietly through brokers, various brokerage houses. They didn't announce it. They just started selling. Well, it doesn't take a genius to notice when a stock price starts to kind of cave a little bit. And the big stock price back then was RCA. RCA was the big one. So when it starts to cave, so this is what happens. If you have borrowed money from a bank or a broker to buy a stock, let's say you borrow enough to cover a little bit, 10% of the price of the stock, and you owe that guy. If that stock price falls, now you owe him more. Margin calls.
Yeah.
And so I'm sure what was running rampant across the world in all of the different markets, starting in Japan and rolling westward, were these margin calls. Your broker calls you up and says, hey, the stock price of RCA dropped. You got to pay me back your money. So now you go and you sell your RCA stock, but you don't get the whole amount. You only get a part of it because the stock price has dropped, but you still owe your broker the money. So where do you go? Well, okay, I've got RCA, but I've got GE. So I'll sell the GE. So now GE stock starts tumbling. And those people start getting margin calls. Okay, well, RCA, GE, do all 10,000 stocks on the NYSE.
And it's a cascading effect.
And then, oh my God, I can't sell any stock because the price is lower than what I bought it at. So I can't sell stock. So I'll sell gold, or I'll sell silver, or I'll sell oil. And that's what happened a week ago on Monday. It was that combination that causes a stock market to fail. And all it takes is one person to sell hundreds of millions of shares of one stock to push that little snowball over the edge and turn it into an avalanche.
Yeah, like a good puff of breath on a house of cards. That's
right.
all it takes.
So there were two parts to Christian's question, though. Would you put it back up,
Yeah,
please?
sure. Well,
because I want to make sure I answer the second part.
Okay. Give me 1 second
and
here.
Since I'm not on YouTube, I don't know if so is it basically that investors lose confidence and everything crashes? The investors, so there are really two classes of investor. One is, common people like myself, right?
Mm-hmm.
I don't have a lot of money in the stock market. My little teeny tiny portfolio isn't going to make a damn bit of difference. But Warren Buffett, JP Morgan, BlackRock, State Street, Vanguard, you get those great big giant companies all rolling in the same direction. And little investors like me, we don't stand a snowball's chance in hell.
No.
Now, his second question pertains to the economy, but see, the economy is not the stock market. The stock market is the shares of companies that people are buying and selling. So even during the Great Depression, even though we lost 90% of the value in the stock market, there were still companies that were still operating, right? Because there are companies that don't have stock. They are not publicly traded companies. Right. So the economy is separate and different. It's a different kind of a creature, even though it may have tendrils of relations into the stock market. Mm-hmm. But not all companies are traded on the stock exchange. That diner that you like to go to, I bet, is not traded on the stock exchange.
This is true.
I'll bet you Jim's isn't traded on the stock exchange either.
No.
And they've been around forever. So the economy is a separate creature, although it has tendrils into the stock market. But something that's going on Wall Street doesn't necessarily mean it's going to ripple through and hit Main Street. Does that make any sense?
It does.
I hope that answered Christian's questions well enough.
Well, he had a real quick follow-up, and that was, let me pop these up here. Talking about margin calls. So they sell to save on their margins. And even if they sell fast, things crash. Is that right?
Right. That's going in the right direction. But remember, there was another thing happening a week ago on Monday. I love the website downdetector.com. Monday morning, 9 of the biggest brokerage houses were down. You could not get into your account. So if you were an average investor like me, you could not access your account in Charles Schwab, Vanguard. I was at JP Morgan. There was a bunch of them. I didn't take a screenshot, but there were almost a dozen of the really big brokerage houses. TD Ameritrade. Now that one, I wouldn't have been able to get into my money because but they were open for the commercial investors. So the big brokerage houses, they were able to get their sell orders while all the rest of us were SOL. So, so that was the second piece. So in the old days, I don't know if you have ever seen the movie Trading Places with Dan Aykroyd and Eddie Murphy.
Eddie Murphy, Don Amici. Oh,
Jamie
yeah.
Lee Curtis.
Jamie Curtis. Fabulous movie, by the way. Fabulous movie.
It's my favorite Christmas movie. It really is. It really is, because at the end of the movie, when Louis and it's not Valentine. Louis, it's Louis and Billy Ray go over to the trading pits, you know, and they're selling orange juice futures. They're like, buy, buy. And all of a sudden they look around and they go, selling, sell, or, you know, whatever it was.
Right. Yeah, everybody's trying to sell off.
Those trading pits don't exist anymore.
No.
Everything is run by computers. And so all of the market moves that happen in the stock market, it's based on computer algorithms, algorithm. And depending on how that, when I was a student economist, we used to call it black box trading. Depending on how that algorithm was programmed, it would make automatically, it would make the trades. The price goes up, it would sell. Price goes down, it would buy. Price goes, you know, up and down and up and down and up. So anyway, and so a lot of that was going on. But if you can't get a hold of if you can't get into your brokerage account because the website is down, and then I started hearing about midday. Yeah, well, you can call your broker. Oh yeah, how many receptionists do they have? How many of the broker dealers are at their desk just free to take your call?
Yeah.
Chances of you selling on the day the stock market is taking a shit is 0. Yeah. So, okay. So I know all this, right? The week after Biden was installed, I sold out of everything. I haven't been active in the stock market with my own money since January of 2021. Wow. And in January this year, I started looking at it. I could see how the Dow was getting really frothy. So I called up my broker and I said, send me my money. I closed my account back in January. And I took all my money and put it in the bank. Little small bank, little community bank. Nice
Good
place.
idea. Yeah.
Yeah. So
and those banks still do exist.
Bank's still there.
Yeah.
The bank manager loves me. And so when the market was melting down last week, I was like, oh my God, it's melting down again. And I was just having a great time because I had already protected myself.
Yep.
And I've been telling my students for 3 years, you only play with money in the stock market with the money that you don't mind flushing down the toilet, because that really is gambling. Because you don't run the stock market. It's the big industrial commercial companies that run the stock market. BlackRock, State Street, Vanguard, those guys. Those are the people who run the stock market.
Yeah.
And so the game is, here's the game. Every once in a while, that stock, the Dow or the NYSE, it gets really, really frothy. That's when you're supposed to sell, right? Or just before it gets frothy. That's when you sell, because these big companies make it a habit of, when the stock prices get up there, they'll sell it. And they don't care if you've lost your ass.
No.
It's no big deal to them. They got their money and they ran. Yeah. Now you want to know something really funny? I've been telling our son-in-law, I think his I better not say it, but anyway, I told him in January, I said, I think you should take some money off the table. I think you should take some of these stocks that have done really, really well. And I think you should, take some of your profit and put it in cash and just lay it aside. And he looked at me and he went, what do you know about the stock market? You're just an economist.
Nope.
And I was like, okay.
He did not say that. Please tell me he didn't.
He did.
Oh.
And then we vacationed with them, our daughter and son-in-law and grandson. We vacationed with them back in July, like 3 weeks ago, before the crash. And I said, I think you should take some of your profit off the table. He goes, I have got the best stockbroker, and she is really smart, and she knows exactly what she's doing. And I went, okay. Guess who was whining and crying last week?
Your son-in-law.
Yep.
Yeah.
Yeah.
Yeah. Yeah. Yeah.
See, when you get
even my listeners are like, he said, what to you?
Well, he might have thrown in a what do you know, but by then I'm like, hey, look, I'm just the mother-in-law. I only have a PhD in economics and a degree in math. I mean, you're right. I don't know anything. And I'm only older than you by, I'm not going to tell you how many years. I've only been around the block 2 or 3 times. So no, you're right. Don't pay any attention to me.
You go right ahead, sonny boy. You
That's
just
right.
keep right on doing it.
That's right. But I'll tell you, the one who wasn't whining was my husband, who also liquidated his portfolio the same time I did mine. And when I called my stockbroker and said, send me all my money, did the same for himself. And so we're sitting back there going,
hey, sonny boy, how's that stock market working out for you? Like,
right.
Oh, I got it, man. My people in my audience are like, that's just uber rude what he did. What the? I mean, this is just.
Hey, look, sometimes I'm the mother-in-law and sometimes I'm the mother outlaw. And most of the times I'm the mother outlaw because apparently I don't know when to keep my mouth shut and, not stick my nose into anybody's business. But hey, he's married to my daughter. So I figured.
Yeah, you kind of got a right to be able to give your opinion in the matter.
A little hint, tiny little hint. I think you should take some of your profit off the table. What do you know? Okay, apparently nothing.
Oh, good. Well, yeah. more than you do, dipstick.
Whatever.
Well, ladies and gentlemen, if you just happen to be on this live stream, you're like, well, who are these two maniacal fiends laughing at outrageously at what goes on in the market? I'm Brian Tripp at the Front Porch Conservative. This is Dr. Robin McCutcheon, professor of economics at Marshall University. We're talking about some of the recent goings on in the news, and that kind of gets me to my next subject. And this is not surprising, but I'm sure you're going to have something to say about it. Gold right now, for anybody that happens to be watching this, is running at about $2,500 an ounce. Silver's running. Go ahead.
That price that you're showing me on gold on CNBC, that's actually the December gold price.
Oh, okay.
It's not the cash price.
Okay.
The cash price this afternoon. The cash price this afternoon at about 5 o'clock was $2,471.
Ooh,
so,
baby.
I'm not going to quibble about $40 or $50.
Understood.
It's still over $2,000 an ounce.
Exactly.
And it didn't really go down that much on the great crash on Monday. I think it was down. I don't even think it went under 2,300. So, which means that as people were selling out of their gold positions, there were other people in there buying cheap because the price was low. And if you look at the silver price that you have there,
let me pop back up.
that's a couple months out. Those are futures prices. The actual cash price of silver this afternoon at 5 o'clock was like $27.97. So,
That-
so note to self, even CNBC isn't putting the true cash price. Even they're lying.
Oh, jeez. Jeez.
You can't trust anybody, Brian. They're
Uh,
all a bunch of freaking liars.
Gregory House, the television character
They lie
from
about everything.
yeah, what's House's fundamental law about dealing with patients in the hospital? Everybody lies.
People lie. Everyone lies.
Everybody lies. You know, and the reason that I bring up gold, silver, precious metals. I may not be the sharpest knife in the case, but even I've got the good sense to know that when you have the kind of economic problems the U.S. does right now, particularly in the area of inflation, precious metals are probably one of those things that everybody starts running to. Well, apparently they've not run to it; they've marathoned to it. When you've got gold running at 2,400 an ounce right now, and silver running at about 27, so I mean, and I know the answer to this question, but I'm going to tee it up for you. You're sitting here saying that the dollar is inflation. The dollar's highly inflated. I mean, quite obviously, here's your proof. If
Right.
anybody out there is watching this live stream is like, is she really sure about this? How does she know? Exhibit A, ladies and gentlemen, take a look.
Right.
Right.
Well, remember the price of gold priced in dollars, that's just a reflection of how much the currency has inflated.
Mm-hmm.
An ounce is still an ounce. But now instead of costing you $35 an ounce like it was in 1971, now it's costing you $2,500, well, at December price, $2,471 per ounce in cash.
Yep.
So, but the reason this is actually, I think this is going to be in 6 months. I think you're going to have wished you bought it for $2,500 because remember those BRICS countries I was talking about?
Yeah.
Well, they are developing their own. What is it? Their own. What is the name of that? They call it the unit. They're developing their own crypto.
Okay.
And they're going to call it the unit. And it is going to be 40% backed by gold.
Okay.
And based on whatever country, let's say it's Russia. If the Russian unit is going to be 40% backed by gold and 30% backed by the Russian ruble. So let's say Russia and China are trading partners.
Okay.
The unit for Russia is 40% gold and 30% ruble and 30% Chinese yuan.
Okay.
Does that add up to 100? So
Yeah,
it's 40% gold, 30% ruble, 30% Chinese yuan, which means that the unit as a crypto or whatever they want to call it is more valuable than the Federal Reserve note.
Yeah. That's just
so that price of gold. Yeah. That price of gold is low because now imagine with me the central banks around the world, like the Bank of Japan, the bank in Russia, any countries, central banks around the world have been buying gold by the ton. By the ton. The only reason I think that price of gold is not $10,000 an ounce is because of the paper trading that's been going on through the COMEX.
Mm-hmm.
Now, if your audience will do a little bit of research and go find Bill Holter, he is far more knowledgeable than I am. Bill Holter, Holter. Bill is far more knowledgeable than I am about gold and silver machinations in that market. But he is looking at a period of time when the COMEX will have a failure to deliver, because what people are doing is they're buying, let's say silver. They're buying silver at the COMEX for $27.97. And then they are selling it in Shanghai and making a profit of $4 or $5 per coin and taking delivery. And that's the key. They buy it from the COMEX, and apparently the COMEX has got, they've got a place over in Shanghai. So they buy it from the COMEX, even though COMEX is in Chicago, but they've got a place over in Shanghai. They buy it from the COMEX, and then they they truck it up the road and they sell it in the Shanghai exchange. They literally take delivery. Now, how long can that taking delivery thing go on before the price starts bumping up again?
Mm-hmm.
Now, a lot of people say, well, it's just silver. How much of your iPhone or your laptop or your solar panels have silver in them, or your car? Yeah. So silver is going to experience a bigger percentage jump in price than gold will. So for example, if gold goes from 2,500 to 10,000, that's just a 400% jump, right? But if silver goes from, let's call it $30 an ounce to 1,200.
Holy cow. Yeah.
So silver is the poor man's metal to have, because obviously it's much cheaper to buy. But it's something that you can hold in your hand. Unlike Bitcoin. I can't hold a Bitcoin in my hand. And if the market freezes up like it did last week, who the hell cares if you've got it on, cold storage on a memory stick? You can't use it.
Exactly. Yeah, it's not going to buy you a hamburger today, or even on Tuesday.
Can I pay for a hamburger on Tuesday that I eat today? Right.
That I eat today, exactly. Now,
right.
I do have a question from the Rumble side from somebody you're probably very familiar with. It goes by that title, WWG1 WGA Trump 1. I know you two are very familiar with each other. And asks this question: an ounce of gold would buy you a fine suit in 1913. It can still buy you a fine suit. Value of gold didn't change. What changed was fiat currency. Does Professor McCutcheon agree with the above statement or not? Your answer?
Oh, yeah. 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 Okay. 1929, a $20 1 ounce piece of gold would buy you a very fine suit. That 20 ounce piece of gold, that 1 ounce $20 piece of gold is now worth $2,500. That's not just a very fine suit, but throw in the socks and the shoes and the shirt and the undershirt, maybe a pair of underpants. The ounce of gold did not change. The Federal Reserve note has become more worthless. It takes more of those Federal Reserve notes to buy that ounce of gold. So I agree with
WWG1.
That one.
That fellow, him over there. All right,
him over there. Yeah,
over there. That guy.
And that's a good way of explaining it too, because the ounce of gold didn't change. What changed is the between the Federal Reserve working with the government, those two agencies together working, they've printed they've printed trillions and trillions of dollars, and all you have to do is go over to usdebtclock.org, and in the upper left hand corner is going to be the amount of debt, and that's just the debt that the government has built up. If you look down several rows, you'll find the unfunded liability. That's the true amount of that's several hundred trillion right now. It's like several hundred trillion that is unpayable.
Yeah,
absolutely. Yeah. Even the 35 trillion is unpayable.
I mean, you may as well do some. I mean, and you're probably in economics, you're probably familiar with the concept. You may as well declare a year of jubilee and just say, it would be the same thing. You'll never pay it off. The only way out of it is to say,
we don't owe it.
We don't owe it. Screw it.
By declaration, we're not paying you.
Yeah, I mean, and now one of your favorite fans, I'm sure you might want to give her some advice on this. She was thinking about selling her sterling silver.
No,
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 no, no,
no, no,
no,
no, no, no,
no.
no. No,
Not today.
here, and let me tell you why. Because
Okay.
in the old days, the wealth was handed from generation to generation to generation. That sterling silver set, somebody bought that. Maybe up in Connecticut bought it, but it's paid for.
Right.
When she passes it down to the next generation, they don't have to buy it again.
Right.
That is wealth. That is
Mhm.
what our grandparents and great-grandparents and great-great-grandparents knew. That was why a cast iron pan was so valued, because it could go through 5 or 6 generations before something finally had to be fixed, usually the handle.
Yeah.
Right? That the things that you pass to your children that they do not have to buy for themselves, furniture, homes, land, gold, silver, that is generational wealth.
Yep.
So, I mean, if up in Connecticut wants to sell, I'll buy it.
No, I think she's gonna heed
I
your
think she
advice on
should.
this one.
I think she should hold on to it. The
Yep.
things that, because those are things that not only do they have sentimental value for the people who have enjoyed them, but it is also an asset value. So no, I would, don't sell it.
Okay.
Unless you want to sell it to me, and then I can pass it along to my kids.
No, I think
You're gonna keep it?
I think she's gonna hang on to it. She said in chat, yeah,
Okay.
I'm probably gonna hang on to it. Now,
Yeah.
you touched on something a moment ago, and I'm just gonna ask out now. Look, the warning bell has now been rung with the July report. I mean, don't get me wrong, there have been bells going off for a while now, okay?
Right.
And there have been some very smart folks, yourself, others, who have been out there saying, guys, it's coming. You know, when this one hits,
It's gonna be fun.
well, yeah.
Okay, from my point of view.
Oh, I understand. No. I understand. I mean, at this point, you have the blessing and or curse, depending upon who views you in this moment. You have the blessing or curse of being an economic Jeremiah. You've been warning everybody, this is coming. It hits. Everybody's like, Lord, give us mercy. And, you, the economic Jeremiah, get to stand up and go, guys, you ain't getting mercy anytime soon. And just settle in, because this one's going to last a while. So,
Yeah.
how bad? I mean, you've said it. How bad does this one get, and how long does it set in for?
Oh man. I think I said, on Dave Janda's show on the 27th of July, when I was on his show, I said, typically the stock market does not crash in August. I've studied the stock market for a long time. I've never seen a crash in August. Now, in the summer of 29, the stock market started to get a little jittery.
Mm-hmm.
People were getting a little nervous. It was a little high. People started to sell. But typically our big stock market crashes come in October. October 9th, 1987, 19th, 1987, the 29th in 1929, Black Thursday, October 24th, 1929. October usually is the month when it crashes, but August tells us everything.
It's
So
like the tide going out before the tidal wave comes in.
That's a good way of putting it. That's your warning signal. If you haven't taken your money off the table, you stupid.
Yeah.
Now here's the thing. You go and you take your money off the table, and we get enough of us taking our money off the table, that stock market's going to crash. It's a self-fulfilling prophecy. So now you got to go, do I take it off the table or do I leave it in? I've already taken mine off the table. In fact, I took it out of the brokerage house. I'm like, I don't, because when and if the stock market really truly does collapse, that brokerage house is not going to have your money. He's already done paid everybody else because he's loaning money too.
Yeah.
He's the one doing the margin loans. So that brokerage house is a lot like a bank where you put your money in the bank turns right around, it loans all of it back out again. That bank doesn't have your money. Doesn't have my money. But I have a better chance of getting my money from the bank than I do a brokerage house once the stock market crashes. So August has typically been the month where August is typically the month where people start making teeny tiny moves, and those teeny tiny moves start becoming bigger and bigger waves.
Yeah.
So it is, I know I've heard President Trump say, oh, if so-and-so, if Joe's elected or if Kamala's elected, we're going to have a stock market crash. Well, who's to say we won't have one if he's elected?
This is true.
Because how many of those big commercial industrial investors don't like him? And they go, well, screw you. We're just going to take all our money out. Fork the stock market.
Yeah, which a lot of people would like now are saying, really fork the stock market. Now, one of my listeners and regular supporters, Mr. Goodnight, Mr. Thompson, is asking the question, well, what about folks who maybe don't have straight stocks? What they've got 401ks? What the heck happens to them? Or should they transfer it to a CD if they've got the ability to do it? Not that we're giving investment advice here. Let's be very clear.
But those are good questions. Well, let me start from the back end. A CD, certificate of deposit, is where you, correct me if I'm wrong, but it's where you give the bank, let's say $10,000, and they give you a piece of paper with lots of fancy scrolly work on it, and says, we owe you $10,000 plus a little bit of interest.
Maturing upon this date, if you do not move.
Upon this date, right. So that CD is not liquid to you.
Correct.
You can't actually get your hands on it, right?
Absent penalty.
Okay, you pay a penalty, but okay.
But strictly speaking, you're right. You cannot put your hands on it.
It's not liquid money. It's not liquid. I, in my opinion, it is not liquid money. So let's say you have a 401k. Let's say, and just for transparency's sake, all West Virginia employees, at least at universities that I know of, have to contribute a certain small percentage of their paycheck to, get this, Tia and Cruff. Guess who's managing the 401ks? JP Morgan.
Oh, great. Joy to the world.
Yeah, not so much. So the 401ks generally are comprised of mutual funds, which means it's a basket of various stocks. And they call it a mutual fund because maybe there's 10% real estate stocks, 20%, I don't know, healthcare stocks. I mean, baskets can be made up of different things.
Sure.
But if it's a 401k and you are not, what is the age where you can start getting it out without penalty? What is that?
I believe 59 and a half. I believe it's 59 and a half.
59 and a half, right. Where you can start taking it out. So let's say you're not 59 and a half. You're younger than that. That money is not liquid to you. No. If you're going to take it, you're going to pay a penalty, right?
Right.
So, okay, well, let's say you go, screw it, I'm going to take it and pay the penalty. Then what do you do with this cash? Well, you could put it in a CD, but now it's not liquid anymore.
Right.
What if you bought silver?
Oh, you're in a good spot at that point.
Right? At $27.97 an ounce?
Yep.
I mean, I'm not offering financial advice, but I'm saying, you can take it in cash and you can put it in your mattress and it will still be worthless.
Yeah.
Or you can take that worthless Federal Reserve note and buy you an ounce of silver, and that ounce of silver will always hold value forever.
Yeah. Mm-hmm.
Becomes an asset.
Yep.
Now, let's say you're over 59 and a half. You can start, taking out of your 401k. Probably going to get taxed on it.
Yep.
Again. But you run into the same problem. You can take the whole thing you can take all of it out. Then what do you do with it? Put it in a CD. It's still not liquid.
Yep. Exactly.
Buy gold or silver. You can do that.
Yeah.
I'm not offering. I wouldn't listen. I am not a financial advisor. I don't know what I'm talking about. Clearly I don't, because my son-in-law told me I don't.
Yeah, and I'm sure he would like to extend and revise those remarks.
He might. But all of this. If I go running to Tia and Cruff and I say, "Give me all my money," me and everybody else, we are creating that exact ripple effect that's going to show up in October, and the markets are going to crash anyway.
Mm-hmm.
So this is going to sound ludicrous. What I did, I picked a variety. I've got some of their funds that are, kind of risky. Put risky in quotes, kind of risky. Some are small caps, some are medium caps. I don't think I have any large caps in there. And I basically, I didn't do an eeny, meeny, miny, mo. I researched them. So I was looking for those who were going to give me the best long-term overall chances for increase. And then I said, all right, God, it's all yours, because this money was never mine to begin with.
Right.
Marshall's not going to give me that money because it's a state law that I have to let Tia and Cruff take care of it. So fine. It's all yours, God. You handle it. And I walked away. Mm-hmm. I'm not worried about I cannot worry about this, because it's not my money. And I don't get a say in how that tiny little piece gets spent. So fine. It's not my money. Was never my money. Maybe it'll come back. Maybe it won't. But I'm not counting on it for when I retire. Does that make any sense? I'm just not counting on it.
Yeah.
So I don't know what I don't remember the name of the
Good night, Mr. Thompson.
Yeah, I don't know what Thompson's really wanting to do, but that was my answer. I did the best I could, picking the things that I thought would help me in the long run. And then once the toilet got installed, I just went, it's all yours, God.
There you go. Well, Goodnight does have one follow-up question. What do you think about he says, what do you think about U.S. bonds in 20 years? What do you think kind of position they're in?
A 20-year bond?
Or in other words, what do you think a U.S. bond in 20 years from now? Given what we're about to go through, what do you think? Okay, I hear from the smirk.
Did you hear that?
I just happened to hear that.
Okay, well, let me a bond. Let me describe what a bond is. Okay. A bond is a piece of paper that gets printed up because the U.S. government decided to spend money it didn't have. So they print up a bond that says, we don't have the money, so we're going to print this really pretty piece of paper with scrolly artwork on it with, $35 trillion across there. And we're going to send this bond over to the Federal Reserve. And as soon as it hits the door of the Federal Reserve, it is reclassified as a securities asset. So it goes from a bond, which is borrowing money, to a securities asset. Then the Federal Reserve prints up a check and they send it back over to the government. And somebody in the government goes, wahoo, and they sign the back of the check and they send it back over to the Federal Reserve. And the Federal Reserve deposits that check in the government's account. While at the same time, they make a note, because they do double entry bookkeeping, double entry accounting. So all the liabilities, the money they've loaned out, has to equal all the assets, the money that they own. So the government account is a liability to the Fed, because that's what the Fed, it's like your bank account. But on the asset side, the Fed just sent a check. So a bond is borrowing money. Okay? It's money that, just like the CD, you are going to loan to the government. Let's say you get a 20-year bond, the 20-year treasury. You loan the government $1,000 for 20 years, and the government says, I solemnly swear I will pay this $1,000 back with 4% interest. I'm making it up. In 20 years. Not next month, 20 years. So you have to ask yourself, what else could you have used that $1,000 for instead of loaning it to the government? Now, honestly, do we really think the government, the one that's here now, is going to be here in 20 years?
Not as currently constituted, no.
Right. Not as, and that means that so you remember you talked about a debt jubilee? So tell Mr. Thompson that debt jubilees mean you don't get your money back either. Government's not going to pay any of their debt.
Yeah.
And that 20-year bond is a debt.
Yeah. And after,
so I would take whatever money you think you want to put into bonds, gold and silver.
Okay.
Or land. But even that you don't own, because if you don't pay the taxes on it, the county takes it. So gold and silver.
Okay. All right. Well, I'll tell you what, let us shift gears just ever so slightly, because as everybody is well aware, politics and economics, unfortunately, are inextricably linked these days. And with that, let us take in a little bit of the current flavor of what's going on as we're headed for a presidential election. And before we do, real quick commercial. My name is Brian Trippett. This is Chattin on the Porch. My guest is Dr. Robin McCutcheon, professor of economics at Marsh University. And given events over the past, shall we say, 10 days, may as well talk about it, because it's affecting everybody, including you and me and everybody's wallet and bank account. Okay. So we got a presidential election coming up. And we have some very familiar players. Some of them not as familiar as others, because we thought the other familiar player was going to be here, but apparently he's not going to make it to the event. Oh, and thank you, Mr. Thompson. I genuinely appreciate this. Very kind of you, sir.
Oh, thank you so much.
Much thanks. Now, most people know Trump's policy, and stop me where I'm wrong. Trump thinks that he can work his way out of this one on the theory of, okay, we're going to get fuel costs down because we're going to drill to the bottom of the earth, suck out every ounce of oil we can get, which I'm exaggerating his position. But then again, Trump tends to exaggerate too, so I don't think I'm in bad company. We're going to suck out every ounce of oil we can get our hands on, which in turn should lower prices, the cost of transportation, which lowers the cost of getting goods from one place to another. This generates, revenue to the Treasury by the fact that we're, producing our own energy. We're not having to pay somebody else. Okay. And then on the other hand, you have Kamala, who, what, you don't like the way I said that? Or you? Then we have...
You're fine. It was just the contrast. Made me want to sneeze or puke.
According to the Babylon Bee, she has every intention of announcing her policy positions just as soon as the polls tell her exactly what they are. Okay. The situations are dire, and I'm sitting here being something of a smart ass which my audience realizes, well, that's not necessarily unusual. Okay. And again, much like we're not giving out investment advice, we're not telling you on who to vote for. But in either of these individuals is what has been described previous to now. Do either one of them have policies that staves this off, or do either one of them have policies that makes this worse? Or do we even know if they can do any good, or can they turn it around somehow? Your thoughts?
Well, let's look at Ms. Harris for a moment.
Must we?
I think, in fairness, we probably should.
I'm kidding. I'm kidding.
I mean, crap. I forgot to bring a bucket.
That's all right.
You got one for you. Okay. Harris, for all intents and purposes, has been vice president for 3.5 years, right?
Exactly.
And she just copycatted Trump's no tax on tips.
Correct.
I really want Trump to come out and say, look, we're not going to tax anybody's income at all, just to see if she'll copycat that one.
Now that'd be funny.
That would be hilarious.
That would.
The sad fact is that the Biden administration's economic policies have brought us to the cliff of economic destruction. So if you want more of that, go that direction. Personally, I don't think the people in my area can take much more. I think the people in my area are hanging on just by their fingertips. In fact, if I drive around the neighborhood, I've only seen one Biden sign, and then when he got deposed, he changed it to a Kamala sign. Nobody else.
Wow.
Nobody else. So, if you like the economy how it is, if the inflation isn't a concern to you, if you can go to the grocery store and buy whatever the heck you want, and you can travel all over the if this economy has been really good to you, then you should stick with the people who brought it to you.
Okay.
In my opinion, the Biden administration could not have done a better job destroying the economy than they've already done. Everything that they've done has destroyed our entire country.
Yeah.
And there's no other team that could have done a better job. No other team. Now, you want more of that? Vote for that. Now, what is Trump going to do? Well, I'm glad you asked that, because in February of 2020, so you remember February of 2020, 4 years ago, plus a little bit, 4.5 years ago?
Yep.
President Trump put the Federal Reserve underneath the U.S. Treasury. He removed their charter.
Okay.
There was an article. It was a little teeny tiny blip. Meet your new, what was it? The title was, Meet the New Chairman of the Federal Reserve. It's President Trump. That was the gist of the title. And I read this and I was like, what the hell is he doing? He took the Federal Reserve and he put it underneath the Treasury. He wants no tax on tips. Now he's talking about no tax on Social Security. How much of a step is it to go from that to no income tax at all? Because we don't need the Federal Reserve, because we are going to have our own unit, like the BRICS.
Okay.
My prediction is that President Trump will abandon the Federal Reserve note in favor of a real, true U.S. dollar backed by gold and silver. Now, what have we done with all that debt? Didn't President Trump just say just a couple weeks ago, what if we just pay off the debt by paying a little bit of Bitcoin? And then he said we want to have a stockpile of Bitcoin.
I remember that.
Well, holy crap. How much of a stretch is it? If he's already put the Federal Reserve underneath the Treasury, that means that Jerome Powell is useless. Well, he's useless anyway. But
that's true.
But he's just a figurehead.
We start with a clean slate.
Yeah, you start with a clean slate. So if you rid yourself of the Federal Reserve and you rid yourself of the income tax, what is that going to do literally overnight to everybody's paycheck? Can you imagine getting your whole paycheck and not half of it?
Yeah.
And you know, my wild ass dream of telling the IRS to go F itself because there's no more IRS.
Yeah.
What if there's no more? I mean, I'm trying to think about this in a wild ass imagination way. If I was President Trump, what would I do to make everything, to take us back to a constitutional republic? Because we are not a democracy. We are not a mob run by 51%. Two wolves and a sheep trying to figure out what's for dinner. That's not what the United States is.
Yeah.
And so if I was President Trump, what would I do with that second term? I would do everything I could to return our country to the original constitutional republic that it was, which means, excuse me, there's no Federal Reserve because there's no central bank, because our money is ensconced in the Constitution of gold and silver.
Yep. And if he plays his cards right, he just might get you, Miss Goodnight, Mr. Thompson, and a whole bunch of other people just might get their wish. Because the circumstances are lining up to make it happen.
So now I want to drop a little tidbit of information. If you pull a $20 bill out of your wallet, get you a whole bunch of them. Go to the bank and ask your bank manager, because I did this 2 years ago because I noticed something. Any $20 bill that I had, there was no date newer than 2017. Go look. So I went to my small community bank, and I said, bank manager, can you show me a $20 bill with a date newer than 2017? She goes, oh yeah, sure I can. She brings a new stack wrapped. Yeah. Flip, 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 flip. Couldn't find one. She goes, that's really weird. And I said, take a look at that $20 bill. On one side, the 20 is etched in gold. And it says United States of America on the right-hand side of the bill. And on the left-hand side of the bill, it says Federal Reserve note. So now how would Donald Trump replace a Federal Reserve note with a true US dollar? Take your 20 and rip it in half. Throw away the Federal Reserve part and keep the one that says United States of America.
That's all you really need. Because
now, you will not find a new $10 bill. You will not find a new $5 bill. You won't even find a new $100 bill. This was the rumor that I heard, the only plates that Trump left in the Federal Reserve were the $1 plates.
Interesting.
So you will see $1 with, what's her name? Grandma Yellen.
Yeah.
You will see. But you won't see a $20 bill or a $10 bill or a $5 bill. Now, I invite your audience, if they can find one, a 20, a 10, or a 5, newer in the Biden administration, I would like to know about it.
Okay.
I would like to know.
I'll have everybody in Fedora Nation at some point
Because remember, Trump put the Federal Reserve under the U.S. Treasury February 29th of 2020. What hit 2 weeks later? COVID. No, everybody, because I remember this title. It was in a CNBC article, or maybe it was Zero Hedge. Meet your new Federal Reserve Chairman, President Trump. And then 2 weeks later, we're off and running with the COVID crap. And everybody forgot about it. So here's what I think happened. This is speculation. I think President Trump already got rid of the Federal Reserve, because if you go look on Google Earth, the Federal Reserve in Washington, D.C. has been all wrapped up like a great big marshmallow since he left. There's nobody there. I have a friend whose daughter is a vice president of one of the Federal Reserve banks. And in March of 2020, all the Federal Reserve people were sent home to do their work at home. She's still there. She's still there. And she didn't work in the DC branch. She worked at a different branch.
Interesting.
I think the Federal Reserve really, truly is no more. And I think a lot of the shenanigans that we've seen out in the world are just that. They're a distraction to keep people from going, wait a minute, how come none of my $20 bills are newer than 2017?
Interesting.
Does that make sense?
It does.
So I think he's already taken care of that. Now, what happened to those 87,000 IRS agents?
Good question.
Have you heard about them?
Nope.
Now, where do you think Trump is going to get that stockpile of Bitcoin from? You think the federal government really is going to print up new Federal Reserve notes to go by? Or did one or more of the executive orders that he wrote, like Executive Order 13848? Wait a minute, I have a list of them right here somewhere. Executive Order 13818, Executive Order 13823, 13848, 13903, 13912, 13919, 13961, 14067. Oh wait, that was Biden. One of these executive orders, or all or more of them, allow for the seizing of assets of people who are found, I don't want to say guilty, but who are found involved in human or child trafficking.
Yeah.
So,
yeah.
Do you think he confiscated some Bitcoin somewhere?
Yes, I'd say that's very possible.
Who just died this last week? Really famous lady. People have been... Salty Cracker, who I love listening to, cursed her for 4 years. F you, Susan Wojcicki. We're off of here.
Yes, that's right.
That's right. What was she doing? Is she really dead?
Well, reports say she is. Just saying.
Why did President Trump expand Gitmo? Why did he spend $500 million expanding Gitmo? He took it from a size that would house, I think it was something like 1,000. It will house now tens of thousands of people. Why did he expand Gitmo? Why did he put 3 new geriatric hospitals there? Why did he build an additional 2 or 3 brand new state-of-the-art highest technology there is, courtrooms at Gitmo. Why did he do that in the last year of his first term? Why did he do that? How come Obama could not shut down Gitmo? How come Biden hasn't shut down Gitmo? Because they're not in charge. So who is in charge? Who is in charge? Have you heard of the term continuity of government?
I have.
What do you think all those EOs that I just read you did? It put the government in continuity of government. Now, who runs the government if we're in continuity of government? If we're running a devolved government, who runs the government? It's not the president. Trump basically shut down DC. Do you remember? Do you remember the walls around DC, the gates, the concertina wire? Yeah. Do you realize that all the hinges on the gates were on the outside? That's to keep people in, not to keep people out. You remember the National Guard was all over the place in DC when Biden was inaugurated? Did you pay attention to the time he was inaugurated? Do you know that the inauguration must start at 12 noon by Constitution?
Yeah, that's right.
What time did he get inaugurated? 11:47 a.m. Yeah. And did you notice the day that he got inaugurated that during that 1 hour, there were people behind Biden that changed clothes from gray to pink to gray to pink? There was one lady, the lady in pink. She went from a gray dress or a gray coat to a pink coat to a gray coat. Some of the scenes were sunny and bright blue skies, and some of them were overcast with snow. People in Europe got video 8 hours before Biden was inaugurated. I know these people. Yes. So what happened? Do you remember reporters standing on the buildings looking down at where Biden was supposed to be inaugurated? And they said, there's nobody here. There's nobody here. Do you remember how Lady Gaga was escorted? Do you remember the person behind her? How do you escort a lady? Isn't the lady's arm over the gentleman's arm? No, he had her by the elbow. Who escorts a lady by the elbow? Remember how she was dressed?
Right.
Kind of like she was out of the Hunger Games. Was the whole thing just a big farce and movie? Just to put us on?
Yeah.
Did you notice as Biden was driving in the limo up the streets of DC, did you notice what the National Guard did? They turned their backs on him. They turned their backs on him. You tell me.
Very weird.
We are watching things and have been watching things since January 21st, 2021, that do not comport with real life.
Yeah.
How did Biden get COVID? And I watched the other day, you were talking about his jet almost shook itself to pieces flying back to Wilmington. Not Walter Reed, Wilmington. 3 or 4 days later, Biden comes out on the front porch of the White House and he's 6 inches taller.
Yep.
I got to get me some COVID if it's going to add to my stature.
Yep.
Did you know that Tyler Perry, the guy who plays Medea, did you know that he has a set of the White House in his studios on his studio grounds in Atlanta.
Did not know that.
There's also another set of the White House out in Culver City. Now, the one out in Culver City has the way it's located on the set, there's a parking lot behind it. When Biden was in the Oval Office, you could see that parking lot. But from the real Oval Office, there's no parking lot. So where was Biden? Was he in the White House? Did you know that when President Trump left the White House, his very last day, he locked the door and he took the key? Did you not see Biden and Jill walk up and they couldn't get in? The White House was locked. What are we watching, Brian? It's not real life. It is an elaborate show. Do you ever watch The Wizard of Oz?
Yeah.
Who was the little dog?
Toto.
Isn't he the one that exposed the wizard?
Yeah.
Pulled back the curtain. The great and powerful Oz orders you to stop staring at that old man over there. What is happening out in the world is we are seeing the curtain being pulled back so that we can see the machinations of what Rush Limbaugh called the deep state in its ugly, fetid, gross, disgusting self, and all the dark tentacles everywhere. Did you know that in 1871, U.S. grants sold us basically back to Britain? That the Constitution for the United, with a little u, states with a big S, was changed to the United States, the Constitution of the United States. It used to be the Constitution for the United States, little u. Did you know that in 1871, the Organic Act made D.C. its own municipality and corporation? Was your mother born with a birth certificate, or did she have to get one? How about your grandparents? My dad, there was no birth certificate because all births were noted in the church directory. Nobody had birth certificates. So what are the birth certificates for? Do you know that they're printed on bond paper?
Yeah.
Did you know they have a CUSIP number? What's a CUSIP number? CUSIP. What is it used for? It's used for trading bonds. Your driver's license. If you look at your name on your driver's license, it's all in caps. Yes?
Yeah.
Why?
Easier to read, I assume.
Because only corporations have their names in caps. Have you looked at your birth certificate? If you look at your birth certificate, did your mother sign it or did your father sign it? Go back and look at your birth certificate. Where they signed their name, it does not say mother. It does not say parent. It does not say guardian. It says informant. Your mother handed you over to the state. We have not been told the truth about what's been going on in our country for 170 years. We have been sold into slavery using our birth certificates. We have been made persons by the 14th Amendment. Do you know what a person is? According to Black's Law Dictionary, the 4th edition, a person is a mask, a persona, a fake. That's why your driver's license name is in caps. That's why your Social Security name, the name on your Social Security card, is in caps, because your persona is a corporation. You told me your name was Brian Trippett, but your name is Brian of the House of Trippett.
Right.
They have stolen your birthright. Your birthright to be a free American, your birthright to be a free man was stolen from you in the 14th Amendment of the U.S. Constitution, because it made you a citizen, person, and resident. A citizen, the original definition from all the way back in Roman times, is a municipal servant. A person is a fake, generally used as a corporation, and a resident is someone who is temporarily abiding in order to do business. They have changed the words. We are not told what these words are. We are not informed. Why? Why would they want us to know? Why would they want us to know? Why would the deep state want us to realize that as soon as we're born and our parents sign our birth certificate, informant, and turn us over to the state, and we get that Social Security card that makes us a slave to the federal government? You're not a slave. For a couple of days after you were born, Brian, you were actually free. Nobody owned you. And what did President Trump tell us in his inaugural speech in 2017? He said, we are giving you back the power to the people. Well, what does that mean? It means that our sovereignty is going to be returned to us. You are a free, sovereign being. You are your own sovereign. And we have been lied to for almost 2 centuries.
Wow.
Everything that you think you know, that you've been taught, if you approach it like Dr. Gregory House,
Everybody
they
lies.
lie about everything.
Mm-hmm.
If you start with they lie about everything, that means that you can begin to find the truth.
Yeah.
Does
And
that make
hopefully
sense?
it does. And we have been dropping a lot of truth tonight. So,
well, if YouTube kicks you off, just go to Rumble. Rumble is much better.
Oh, I agree wholeheartedly. Robin, I want to thank you for being back on here tonight, and we're going to go ahead and bring this thing into the station. Where can people find you on social media, and where can people find your lectures? Because I know that you have lectures that are up online if they're wanting to hear more of what you've got to say.
Sure. I'm not really on social media. My college, some, I don't know, 10 years ago, forced everybody to get on LinkedIn. So I have a small little tiny footprint, but I never go there. So if you want to email me, find me at Marshall. I'm happy to answer email. I have a website. It's linksync.com. That's lync-sync.com. lync-sync.com. It's free to use. All of my radio and podcast interviews, I have hyperlinks at the top. They're all there. My In the Classroom are my econ lectures, and my freedom lectures are my Atlas Shrugged class lectures. So it's free to use. My really insignificant gift to the universe. Thank you so much, Brian. I know,
glad to have you on here.
I know that I was dropping a lot of heavy shit, but I think that it's time for people to realize that we have been lied to. Everything that we've been seeing these last 4 years has been fake. Kamala is fake.
Oh, absolutely.
Her audiences are fake. People have been finding that they're AI created. It's a fake campaign. It really is.
True.
And I mean, a fake presidency, a fake campaign.
Fake everything.
It's fake.
Yeah. And good night. I want to thank you once again for the super chat. He has one last question.
OSS?
Oh, I'm not sure what that is, but
I
I
don't know
put
what
it up
that
there.
is.
Well, we'll figure it out someday. Folks,
Okay.
with that, Robin, hang on for 1 second. We'll say some
Okay.
proper goodbyes behind the scenes. Folks, I want to thank you for being here tonight for Chatting on the Porch. I will be back Wednesday night at 7:30. I will not be live streaming tomorrow as I have a family engagement that I must tend to. So folks, thank you so much for being here tonight. It's been an absolute pleasure. And in the meanwhile, we'll see you this coming Wednesday night, 7:30. Thanks again, folks, and you have a great evening.